Good evening. It is 8:42 on the 9th of December in 2020. So, quick video for YouTube. This is just what can I title this video? I don't really know what to call this one, but what we're going to discuss basically is how the market can cause you to be a bit more conservative. So last week we had a week where price action was trending and we saw, some bullish up moves in price action, which gave us some decent trading opportunities on Euro US dollar. This week, at the beginning of the week, we established that this week we might need to be a bit more conservative in terms of taking trades. And the reason for that is because price action has traded into some key levels on the higher time frame that are making us raise some eyebrows, really and truly, on euro dollar and dollar index. Um, yeah, that's pretty much it, really. So, what we're gonna do quickly as we go into this video is we're just gonna run over or quickly watch on one of the videos that we had this week today. I'm trying to say, and just kind of hear the undertone of our analysis. So, kind of get the summary of pretty much what's been going on. So, I'm gonna quickly play this video for you guys. So, we're gonna just get that on the small print. No way. How do I get here to? Because this is not what I want. Um, bro. Okay, there you have it. All right. So this is what I was trying to do. So let's just quickly hear some of the discussions or some of the key points that we made in this video. Then you kind of get an understanding of why I was thinking the way I was thinking. So let's get into it now. On Wednesday, the 9th of December. And this is the New York session, and we are just going over some of the things that we discussed last night. So with Euro US dollar for since about Monday, really, we have been saying that we are not over expectant. We lowered our expectations going into this particular week simply because price is trading into or has traded into some key resistance levels on the higher time frame. And we kind of anticipate price to maybe slow down, go into a bit of consolidative action, as we have kind of seen in the last few couple of days. So, not really the most exciting week in terms of forex, as you can kind of see. So you see, this is Monday, Tuesday, Wednesday. So pretty much trading between that Wednesday, Thursday, Friday range, and not much has really taken place in terms of anything too interesting. So last night we discussed the fact that we wanted to see price break below Monday lows, come down below 2080, and maybe trade down here where we would consider taking a long position on Euro US dollar. But that has not happened, and since last night during the Asian session, price actually found some support around here, rallied all the way up to take out those equal highs on Tuesday highs that we noted last night, and then price obviously started to break lower. So this is 6 a.m. today, price breaks above those equal highs and then begins to trade lower since then. So look at 7 a.m. around here, so the London highs, London open highs, London open lows, and then now we have New York. So what can you say about New York? What can you anticipate? In my honest opinion, nothing interesting nor exciting. This is that phase, yeah. So we know, looking at IPDA from a weekly perspective, you expect Monday, Tuesday, maybe Wednesday to be quite consolidative days. So you expect the consolidation, the manipulation, then the expansion. So you know how it goes. Accumulation, manipulation, distribution, if you want to call it that. We know a bit about that. But using the IPDA, obviously it's consolidation. Then you're going to get some sort of Judas swing. You're going to get some sort of expansion, such and such. So best thing to do is just be patient. You know what I'm trying to say? This is one of those weeks, yeah. And the truth about learning is that during weeks like these, yeah, your spirit can get, what's the word? Your spirit can start to feel down a bit. And the reason for that is because following last week's trading, where we kind of saw some very good price action that was in favor of what we like to see, winning trades, right? You then go to a week like this, which is a bit slow, nothing exciting, you know what I'm trying to say? And weeks like this week, so far anyways, will happen. They will certainly happen, and there's not much you can do about them, especially if you decide, you know what, I'm a euro guy, I'm going to trade euro US dollar without swaying between euro US dollar, GBP US dollar, those kind of things, without really deviating a lot. Then you might notice that, okay, euro US dollar has weeks like these where it's very, very slow. Pound has moved, but the pound has moved more so. But anyways, yes. So we spoke about last night and how we were looking for price to break below 1.2080, and we were looking for obviously a potential long position from about 1.20685. I think that was the level that I had my orders in. So last night during the Asian session, we actually set orders in the marketplace for that level, 1.20685. And then obviously, let's take a look what has happened so far. So it is 8:50 GMT PM time, and this is what's happened. So you can see clearly that price has in fact traded to where we were anticipating. Do you know what I'm saying? So New York session today, we had the break, we had the retracement, we had the break lower, and then price came down exactly bang on, boom, 1.20685. Price trades into it, makes a low at about 57, 58-ish. And then now we're kind of beginning to see an up move. Now, what I could potentially call this video is when to lower your expectations and potentially when not to execute trades. Now, I don't want to say this is gospel. You can never say this is gospel in the markets here, but one thing I have noticed over time is that, taking trades at a certain time is not the best thing, especially if, say on a bearish day, yeah, and it goes past say 4 o'clock, 5 o'clock, and you decide to take a trade. In my experience, this never really used to work out for me, because what would happen is it's a bearish day, price trades down to here, you take a long position, price begins to give you a little move up, and then the Asian session will open, and then price might come lower, and then you're now thinking, you know what, it's cool, let's just hold on. Price could continue rallying. It could turn around and continue rallying, and then price pushes lower, and then during the London session, you get that pullback, you're in, 1-2 pips in profit, you get excited, and then boom, price breaks lower. In my experience, that's happened to me, basically, you know what I'm trying to say? So, that is the reason why I took my orders out of the marketplace for 1.20685, simply because price was trading at a time where I've kind of felt like, you know what, based on the experience that I've had, it's not a good time to take a trade. So I stuck to my guts. I took my orders out of the marketplace, and in my opinion, I felt like I did the right thing. Now, generally, you can kind of see this week has been consolidative. Price action has pretty much been ranging. So this is Monday. So Monday, we've been in consolidation here. We've traded back down to that key level where I was expecting to take a long, but we didn't take it because of the timing. Price is beginning to sort of move to the upside now, you can see. So, yeah, you know what I'm trying to say. So that's the way to look at it. You know what I'm trying to say. Now, we're not going to get into a lot of, technical concepts in this particular video. And I know I don't have many followers right now. I don't have many viewers. So it kind of feels like I'm talking to myself. You know what I'm saying? But anyways, whoever is watching this or pays attention to this, one thing I'll say to you is we are going to bring those concept videos in sooner or later. When I say concept videos, I'm not saying, this is going to be me saying, oh, this is one of my concepts. No. It will just be maybe a bit more direction on how you can use these particular concepts to kind of suit your trading. And when I say suit your trading, I mean, I'll be talking about my experiences with these concepts, basically. So, and how I use them. And hopefully that can obviously kind of help you in your own trading. Maybe you might look at that, how to pick out key levels. There's a video that I did, one of the first videos that I did, how to pick out key levels, which is exactly how I came to, getting these levels here: 1.22, 1.2180s, 1.2080, 1.21 big figure. That's how I got to picking out those levels. And there's obviously there's more to it. You know what I'm trying to say? A few more things that I consider that are in my trading plan. And obviously we're not going to spill all the sauce. You know what I'm trying to say? These concepts, as I've said before and time after time, I never made these concepts. I learned these concepts, and then I had to piece together a formula or a plan on how to actually use them. And a lot of it was based on experience, in my opinion. And it all came bit by bit by bit. You know what I'm saying? One day you feel like you figured this one out, and then you get burned. And then you realize, okay, just by itself it doesn't work. There needs to be another component. You add that component and you backtest it, and you basically go back to the drawing board several times. You know what I'm trying to say? So that was my experience. But eventually, I feel like I've reached a level of understanding that might allow me to actually say, you know what? I kind of know how to analyze price. Nowadays, I know how to sit on my hands a bit more as well. You know what I'm trying to say? And that's something that I never used to be able to do before, because I used to have this urge of just wanting to be in a trade. You know what I'm trying to say? Of just kind of feeling like, oh, if I'm not participating, someone else is, and someone else is making money. You know what I'm trying to say? But there are market conditions where, like this week, you are forced by the market to lower your expectations. Do you know what I'm trying to say? And that's not a bad thing. That is actually wisdom. You should be able to use this wisdom and understand that, okay, these market conditions, or to be more specific, this week, I can't be as expectant as I normally would on another week. And every week is different in these markets. Like, as I said in that video that I was just playing within this video, sometimes you have these weeks where things are slow in comparison to last week. Last week, we had a very bullish market. It was, I would say, a little bit easier to pick out opportunities and be like, okay, price is trading towards 1.22 big figure. Price trades above 1.2150. You then come right to the realization that 1.2150 is a key resistance level, coupled with other components as well. And, you kind of build the narrative that, okay, price could really begin to slow down once trading above these levels. And it's failed a couple times. You see what's going on. I was going to say, naturally. So, yeah, you saw price from when it was up, hit these levels here during the New York Open. You saw the prediction that we were expecting to take a long once price breaks below here. Now you've witnessed price break below that level, and who knows what could happen here. Now, I have taken my orders out of the market, so I'm not in this trade. I'm actually waiting up until the Asian session to potentially participate. But yeah, I think one of the biggest takeaways from this video is that you will get situations where your market analysis, and based on your experience as well, you will know when not to take trades. Like I said, in my experience, anytime after 4, I've even narrowed it down a bit more. I don't really take trades after 2. Now you see how this market trades up at 2 o'clock and then it breaks lower. That might make me sound crazy to someone else. However, I know my reasons for not doing that. You know what I'm trying to say? And I also know my reasons for not taking trades around this time here. And it's all based on, just how strong your rules are based on your experience. Like, for somebody else, 2 o'clock is the best and sweetest time to take a trade. For me, not so much. For someone else, they'll come in the market and they'll take a trade just as price trades to the key level that they expect to buy or sell at, and that's their thinking. You know what I'm trying to say? Like, you have swing traders or position traders that only take trades when they reach a certain key level. That's really not my style of trading. There's a bit more to it, and as I said, based on experience, you learn a couple of things or so. And as we know, experience can often translate to wisdom sooner or later. So there's no shame in that. We'll see later on tonight during the Asian session commentary how we might play this particular trade. See if we end up going long or we end up leaving it. Do you get what I'm trying to say? And another key thing is that when you are in these market conditions where you're a bit unsure, best thing to do is sit on your hands, wait for more data to come in, and then you make your decisions based on that data. So that is pretty much it for this particular video. I feel like the learning, what I'm trying to say, the learning curve is just based on, I don't even know what I'm trying to say there, but yeah, that's it for me on this particular video, and I feel like I'll be bringing more videos, later for the people that are watching and tuning in. So that's it, man. I'm out.